How much damage, in your mind, has the turmoil over the past week created on corporate confidence?
A lot. I made a point this week so far of speaking to quite a few CEOs of large cap companies in order to exchange views on the financial market turbulence and the implications of it, and to ask what they were feeling or sensing in their businesses. And across the board, they're either already detecting some weakness or expect to see it shortly. So the level of business confidence is weakening because business conditions themselves are starting to weaken, which is not surprising given the shock and awe character of these markets in the last few days, and the dimensions of the tariff war.
A bunch of Wall Street voices have been speaking out this week. We heard from Bill Ackman, we heard from Jamie Dimon, we heard from Elon Musk as well, who plays a prominent role in the Trump administration. Jamie Dimon seemed to break through, the chairman and the CEO of JP Chase. Based on what you've observed and in your conversations, what's been an effective and perhaps the most effective way to reach out to this administration and to let him know, let President Trump know some of the costs of his pursuit of his policy and maybe convince him to slow down?
Well, Scarlett, it's pretty difficult for almost any CEO, maybe not Jamie Dimon, but almost any CEO, to by herself or himself make an impact on the Trump administration's approach to tariffs. I think that's asking a lot for any individual CEO. Most of them, after all, only talk to the media on a regular basis at the time of their earnings calls, and they're not a constant presence in the media ecosystem. So I think that's just a lot to ask. But I can tell you that in private, there's almost universal disaffection toward the tariff policy, because after all, if you think about it, the idea that if country A is running a trade deficit with country B, then by definition, country B is ripping off country A is simply fallacious. There are lots of reasons for trade deficits, and they're not all bad ones. For example, the United States is not a serious coffee producer. Brazil produces a lot of coffee. So we buy tremendous amounts of coffee from Brazil and certain other coffee producing countries like Colombia. And we don't sell them any coffee. That's not a bad thing in and of itself. Furthermore, exchange rates have a lot to do with trade deficits. Also not a bad thing in and of itself. So the very premise of the trade policy, that any trade deficit with any particular country reflects they're ripping us off, is just not seen as logical by the business community, or for that matter, anybody who seriously thinks about it.
Roger, just looking at the markets, we're seeing IPOs getting delayed, we're seeing deals getting put off, we're seeing money flow out of leveraged loan funds, we're seeing spreads widen. Are you anticipating any kind of market event over the next day or two if this doesn't settle down?
Well, today you saw an alarming thing. You saw the dollar weaken, bonds weaken, and equities weaken at the same time. That's quite uncommon, because typically it's not common to see the dollar weaken and bonds weaken at the same moment.
Right.
That happens often in emerging markets, but not in the case of the United States. That is not a good sign, because it signifies capital outflows, and it signifies diminishing confidence in the growth outlook for this country, and for that matter, the attractiveness of dollar-based assets. So I don't know if that continues or it's a one-day thing. No way of knowing that, but it's not good.
On that point as well, Olivier Blanchard was on X this week saying that China does seem willing to sell U.S. treasuries, even if it means absorbing capital losses. What's your take on how much China is willing to sell U.S. treasuries and what that might mean?
I don't know the answer to that, Bonnie. I don't know that anybody outside of the Chinese leadership could possibly know the answer to that. But again, think about today. Typically, when bonds weaken and yields go up, the currency strengthens because on an overnight basis, you're getting a better return on it for holding it, right? Higher interest rates mean better return if you hold the currency, even overnight. So this is, I said, quite an uncommon dynamic. Now, we'll see what happens tomorrow and what happens beyond it. But I think the markets are essentially saying they don't like this tariff war at all. And they want it to be unwound. They want it to be stopped. That's the message, especially of today's reversal relative to what happened yesterday.
Well, sorry to interrupt.
And that's what the market is saying.
That's what the market is saying, and I think the intention was very different, that the tariffs would push yields lower, and the Trump administration has put a huge premium on lower yields, which would reduce borrowing costs for companies and consumers, but also make it less expensive to refinance government debt that's coming due. There's this theory that they were intended to do just that. Besant reportedly said that for every 1 basis point reduction in the interest rate that government pays on its debt, that would save $1 billion a year. Is that a sound strategy, Roger?
Well, if you're asking whether the expectation of lower yields was sound, let's just say it's not working out so far. But if you step way back and you imagine day one of this administration, and the announcement is, let's have an all-out economic war between the two biggest countries on the planet economically, which would be the United States and China. Why would anybody think markets would think that's a good idea? Of course they wouldn't, and they don't.
Roger, you've been in politics and finance for decades now. I mentioned your credentials earlier. There's an interesting story on the Bloomberg terminal, which has gotten a lot of clicks, about a JP Morgan strategist who wrote a report but then redacted large parts of it so as not to anger the White House and put the firm in the crosshairs of the president. Has that ever happened to you? Is this an unusual thing to happen?
Well, I can't speak, Scarlett, for JP Morgan and what they may be thinking about matters like that. I don't know. I don't think it's quite very common, but maybe there were some special factors involved. I just don't know. Maybe they're having conversations with the White House on the side. Not sure.
Roger, what do you anticipate a U-turn to be? At this point, the president, he did a mini U-turn yesterday, right? But he didn't do a full one. He didn't take off the tariffs that are now already in place. So what does definition look like?
Well, what makes me concerned, at least on this one question you're asking, is that the biggest piece of all this is the U.S.-China bilateral economic and trade relationship. And it's a little hard to see right now how the tempers may cool and the war that's broken out here, economically speaking, may turn into peace. It's hard to see that. That's the one thing that I think would enable markets to calm and return to stability. A ceasefire in the U.S.-China war. People say, well, China has a lot more to lose because they export more to the United States, of course, than we do to them. But I don't think that's the core point. Again, if you have the two biggest countries on earth economically in an all-out economic and trade war, it's just not a good thing. And that's what's going on at the moment.
So, Roger, final question to you. How do you advise your clients, your corporate customers, how to move forward right now in this period of great uncertainty when we don't know what's going to happen and companies still need to move forward and make decisions?
Well, the problem is the financial market turbulence and the beginning of some economic softness that some of them are seeing. I don't talk to every single company, so I can't say that everyone's seeing it. I'm sure they aren't. Is causing them to adopt an approach of caution. And in practice, that means caution on hiring, caution on capital expenditures, caution on other forms of expansion, There's a cautionary mindset right now.
Yeah.
It was not the case 2 months ago. And that in itself isn't good because it becomes self-fulfilling in terms of economic weakness. Most
Right.
of them expect that GDP this year is going to be, GDP growth is going to be minimal,
Yeah.
or possibly by the end of the year even turn negative.
Roger.
And they did not expect that a couple of months ago.